once again, to update our new MMTs, is that there was quite a knee-jerk reaction today on the FOMC meeting. And the volatility had picked up because for the last several days, the volatility has been holding that 30 handle on the VIX. And the thing about that VIX is... Right, here you go. Keep telling me. Give me the stats.
New lows on the S&P, new lows on the Dow, new lows on the transports, new lows on the Nasdaq.
Wow. This is FOMC meeting day, and I have the VIX breaking out, and I have equities selling off that an MMT is giving me what they're doing. And obviously, let's let you take a look at this.
Apple at 0.
Let's let you take a look at this. The market's moving very fast. Apple's at 0. We'll short that. We shorted it. It's 164. Now MMTs. Notice that early on when the announcement first came out at 11:15, you had the volatility up, but then you had the initial sell-off, the initial bounce. It's only being down 67. Now the selling is starting to increase very quickly. You can see here it's 12:35 p.m. This is an FOMC special MMT training live with it going down, and happening right now is how that FOMC volatility, both the long side and the short side, come into play. But then you can see the reactions here later in the tape. The sellers got control of the market, and you're breaking down in the areas on the S&P. You're below 1186 now. And we are in a reversal now. This is the third calendar day of this week. The previous 5-day calendar week was where we made the highs in the triple witching, and we went through that. This is day 3 of a topping pattern from those lows of 1136 on the S&P, going up to the 1220, pulling back, testing it, not going through it, with another key reversal to today. Here we are with the 3-minute S&P 500 chart. And the thing about it is you're at the lows of the day. This was the volatility today with the S&P on a 3-minute level. And we can clearly see how we had put bottoms in, went up, tested the major areas, and then falling very rapidly and straight down in this frame. And the diamonds were going lower, diamonds going lower, diamonds below the other diamonds. That's weakness in price action going down, 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 and we finally hit a bottom right there. So basically what we'll be watching is we'll do our daily analysis to confirm what I had been saying about how this bottom from that short down, how strong this bottom's going to be in the last, let's say 23 minutes of the closing FOMC volatility tape. Walked it up, walked it down. That is the S&P 500. We're down 167 handles. You can see that they're dropping the bids down mildly. We're about to break the lows on Apple Computer. The put side and call side.
We're 40 cents off that 540 call.
The 540 call, we're out to buy it. We're going to pay for it.
We're at 860. It's at 9.
All right. And how much time do we have left of the day? 22 minutes. So
yep.
I'll tell you what. I'm going to take a look at the Google chart, and we're going to find
890 on the bid right now.
All right. What is the IR? I don't hear of any.
4.
Well, if you said 0, cancel it.
It's 4.
We're putting it at a 710 bid to buy that call on the low of the day. They just made the low. These were several times we bought and sold for a profit. IR, we are at a low ratio 0.21. We're right on it. We're about to break. If we break that ratio low, we'll come down and try to steal that one. Apple is breaking to all-time lows. You're down right now. Ha ha, 222 on the Dow. Remember, it's an FOMC closing 20-minute bell left. But the sellers have moved in and the shorts are paying big. And I'm saying that we have reversed from that last run to the upside. Volatility has a confirmation reversal today. And the reason why I'm saying that is for one reason. And I can even show you why, and I will be happy to do so, is that on my daily S&P, I made my big rally. I made my rally down also, and I made my rally up, and it's failed, and it did not ever get, it tested our 1220, and that was the kiss goodbye. Then today, the other day, you had selling all the way down in that daily wick, and today, right now, you're at 1175 here on that S&P on a daily. I repeat, daily. That
Moving it down to 670.
Okay, that means the upside volatility played its course. This is last week's 5 days in the triple witch. And that's the kiss goodbye. And that's how the bottom goes. You trade it up, you short it. You trade it up, you short it. You trade it up, you short it. And when they could not take out those highs, that was it. And the S&P is technically now broke within the cycle to the upside volatility. In order for it to get back into its groove, you would have to have a gap back up in the S&P, and that gap would have to be above the 1205 handle, and then you would have to proceed to break out. Any upside volatility to any one of our daily half-bar calculations at resistance with new selling coming in, we would be selling short again. If we get long somewhere down in here, we'll be going long. And once again, FOMC and S&P 500 daily, you're down 205 handles. And this way, the people that were involved in the two-day FOMC meeting on 9/20 with the announcement today on 9/21, and I told Ken that this was going to break the lows. It came down just like it did yesterday. It gapped up and held the gap, $2 all day. But listen, I'm sorry. It's right here at yesterday's closing price right now, Ken. And this is how the Dow is going. And for new MMTs, this will be a live day that you won't forget. And the thing about it is, how do I trade the FOMC volatility? And how do I get my long shorts? And how do I get it? Well, it's very simple. It's very simple. It's understanding the FOMC meeting. Here we
You
are.
want to keep that 670?
No. We're going into the close, and even if we get hit wholesale down here at 670, we're not going to have enough time. There's only 10 minutes left in the tape. And the amount of pressure on the sell side is we'll deal with this tomorrow morning. Now, I can let you hold a single contract overnight for the upside volatility gap. So go ahead and buy yourself one. You got 10 minutes to get it, and use your application. I'm going back to the S&P. Now, you can see here that the FOMC meeting is doing what it's doing. And this tape so far is 8 minutes and 55 seconds, and there's 9 minutes to the closing bell. One of the things that I want to focus again is the 60-minute S&P. And why is the 60-minute S&P 500? The daily you were showing, the daily. But look at the tops up here. Look at the great day in after day. Look at that. That's beautiful. Not only that, they were breaking out to all-time highs in here on a 60-minute level. But now there's a reversal, and you need to know what reversals are in the S&P. And it's FOMC meeting today. But look at here on a 60-minute level. I get up here, I start going the opposite way. And I come down one day in volatility down here from 1188, which did not hold, and it broke that today. It broke that 1188 handle that you hear me talk about day in and day out. And you also know that you hear me talk about 1220 day in and day out and half bar reversals on 60 minutes. If I got 3 of these in a day, then weakness is building in. If I'm closing below a major half bar up here in that last cycle, which I was, then that S&P was going to get weak. The rest of this is FOMC meeting related. And there is the S&P. It's going to come right back in here. That's exactly where it's coming. And the thing about it is, I'm going to pull up the hood on this 60-minute, and you MMTs will learn how to do this. This is the bar, 1168 right here. That was the last down bar. That was the up 60-minute. That was the buy signal. That's the new support signal. What can I do for you?
I'm looking at the 425 call. It's down at 77 cents by 80 cents.
No, is that a weekly?
Yes.
You got 2 days, and on the opening bell tomorrow, they're going to steal more premium out of it. Let's deal with it tomorrow morning on a weekly. And right now, you got 7 minutes to the closing bell, and this is FOMC meeting day. So I prefer that you do that because this thing can gap down tomorrow, but because it's too far up out of the money, again, you're too far up out of the money, and you're looking for a cheap price on an option to trade, and it can be cheap because it's so far out of the money, it doesn't give you very much of a gain. If you're going to look at anything here, you're going to be looking at the 415 call. That's wholesale. That's what you're going to be looking at. Here we are right here, FOMC meeting, updating MMT will, so that he's looking at buying an up and out of the market volatility trade on an opening gap bell, and the 415 call would give him that premium yield as it goes up. But then again, the $400 put must be looked at as well in overnight price action, pre-market futures volatility that happens on a daily 5-day compounded basis. And the 415 call is where I would be looking at doing that volatility trade, but they continue to sell the market down, don't they? And
yes,
it's
sir.
very nice loud to see that you would be looking at the 415 call on the low premium, and let the sellers sell into the closing bell, and let me pull up the Apple. Say Apple.
Apple.
And say Apple 415 call. Here, I'll tell you what. Wait a minute, I'm live on tape here, but ask me a question. Go ahead. Here.
Can I grab one overnight?
Yeah, let me see what the price is. Yeah, you can. Because you made that much.
350.
All right.
355.
You can, because you already made that much in profit. You can't lose any money.
Okay.
So
I'll grab one.
Now you know why you got to buy one. Only one overnight.
Yes.
Only one of the 415 call for a volatility gap in the morning. But the man already made, if it went to zero tomorrow, he already made that much profit in Apple. He cannot lose money. All right, next question up. You're still selling. Go ahead.
Thank you.
Yeah, I recover one call at 130.80. Is it too soon?
You what now? You sold one call?
No. I buy back one call at 130 and
no, buddy. I would tell you you're rock crazy.
Oh.
And that's what you get. Now sell it out there at 132 even money and try to get someone to buy it. That is not the contract that you want to be doing. And then messing up your cost average. I never told you to do that.
Okay.
Stocks are
almost a round trip for
Stocks are getting taken to the woodshed here, everybody. Ken Flag. Okay? And that bull run lasted, and now we're in another bear reversal. Yeah, and I went over how it would all work. Didn't I?
Yep.
Didn't I?
Yep.
Okay? And the fact of it being is that the selling continues to go. The Apples of the world your little apples of the world. $244 million they're selling the stock, and as they should. The stock is overvalued. And I said that you would hit an exuberant, inflated to deflate for the Apple trader that will suffer the consequences by not keeping stock market orders and trade management correctly. There are consequences, and it is an FOMC meeting. The short side is the only side paying money. Closing bell. Closing bell. 253 million. See if there's any big shares. Oh my goodness. 312 million and counting at the closing bell. Look at here. 121,000 shares sold. And that's for the Apple trader that does not understand inflation and deflation and trade management. Trade management, trade management. 286 handles, trade management. Put side, pay big money. Put side, big money. 650, 1680, big put side day. Big reversal of the 5-day triple witch rally. We called it. You couldn't go higher in that S&P on the 60-minute chart on these days. And once again, the bear is baking a new set of chocolate chip cookies right now. And the bull, on the other hand, is being put to sleep with no food at all. And that there, with those diamonds in that 60-minute bar, that's when the selling increased, and you took it right down to my 1166 handle that I talked about in this very same video, and that was going to be the half bar right over here, and that's 1163 by 1169, and putting that thing right in that channel would be about that 1166. You closed out on the S&P at 1166, and you got 4 sixes. 11, 6, 6, 6, 6. If you're in Las Vegas and had that on a machine, you would have won big money. But guess what? That bull run is over, and there's a reversal, and that's year-end volatility. Welcome to the FOMC in the last hour, and an FOMC meeting, and look at the stocks get their heads tore off. Okay? Look at it. All the shorts. Look at it. Amazon closing lower. Bear market volatility is the best money made up when they go up. So what I want to tell my MMTs, that this is a market that went up last week, day after day during that triple witch. And that was the last 5 days. Right now, we had Monday, Tuesday, and Wednesday go by. So we've had 8 trading range days, 8-day trading range. The one that I showed on the S&P on the daily, is you made the highs on the daily, and you couldn't take them out. But look at this rally. That 5-day witch. 1, 2, 3, 4, 5 last week. That's them 5 days up. Like these trends always do this in the year end. On any 52-week major bottom, you're going to have the volatility up, the volatility down, the breakout, the breakdown, the breakout, and the breakdown. And knowing when to be long, knowing when to have put options to make money, knowing when to be having calls, and knowing when and how that a longer term bottom can be in play. But let me tell everybody, if we stop here on the S&P, if we stop here or back in here and hold, we can see if they do reverse or not. Because what you would be looking at is that every reversal upside, so upside reversal held these half bars over here. And all of this is on stockmarketfunding.com. Let it be known. But here's the thing. I bounce here, I bounce here, and I bounce here. Now, if I was to bounce here anywhere higher than here and have an upside reversal come into play, we'll be on high alert for that. But then again, if we come down here toward this lower end and break these half bars, well, we'll be taking a look at where it hits or where the reversal is. You would like to see reversals happen here and go back up. Why? Because take a look at the lows. They're much higher, every low. See? There's the lows, but you're coming off of here. Right now, if we break below it much further, that shorter term is that you want to see the reversal low be higher in value in our platform. Or it's okay to come down and test these again and then go right back up. We're on high alert right now. It's been a short tape. 3 days in a row we couldn't take it out, and that's the Monday, Tuesday, and Wednesday, and this is part of that. That's a gap down bar, but I mean, we couldn't take it out. And the thing about it is we could not. And we came down and bounced, went right back up in volatility and closed right down here on that diamond low. And I told anybody and everybody anything below 1200 was a short. FOMC meeting, relationship to the daily S&P, to daily equities and calls and puts, closing down 283 major handles. Look at the haircut in the price volatility.